So on behalf of the Madras Chamber of Commerce and Industry, Auroville Consulting and WRI India, I would like to welcome you all to today's webinar, where we plan to discuss ideas to improve TANGEDCO's financial situation. It's also part of the Sustainable Energy Transformation in Tamil Nadu initiative. This initiative by Auroville Consulting and Citizen Consumer and Civic Action Group and WRI India aims to facilitate higher clean energy deployment in the state in partnership with different stakeholders. We know that Tamil Nadu has been in the forefront in terms of installing significant renewable energy capacity. The capacity now stands at around 28 gigawatt, out of which 47% comes from renewables as of last month. And in terms of generation, the state has progressed quite well over the last 5 years with 27% of its generation coming from renewables. So we do see that there have been a lot of policy interventions, and these have been quite encouraging. With record-breaking low auction prices for renewable energy, we feel that the solar, promises, to reduce the power purchase costs, which are quite high right now. Apart from that, we do see that Tamil Nadu Energy Development Agency has also taken initiatives to implement the KUSUM scheme, which is primarily to solarize agriculture in the state. By reducing the extent of free power supply, we feel that KUSUM can significantly reduce the financial burden on TANGEDCO. In context of this, we do feel that there's a crucial challenge, to improve clean energy deployment in India, and that's also because of the poor financial health, including TANGEDCO's financial health. So as of today, TANGEDCO has an accumulated debt of over 1 lakh crore rupees. And like any other distribution utility, the gap between the cost and the revenue has significantly increased. So one reason for that is because the electricity tariffs have remained the same for a few years. The other factor could be the current subsidy regime, which has dominated the state's tariff process. So some of the questions which we would like to touch upon in today's webinar is, have these subsidies actually worked? What could be the impact, that they will have on TANGEDCO's financial bottom lines? And what are the steps that the utility can actually take to improve its profitability? So we do feel that there is significant scope to improve TANGEDCO's revenue realization by moving towards a more rationalized tariff structure, and also with obviously increased accountability in terms of supply and service quality. So we also feel that there is a possibility to explore power purchase, new power purchase models or flexible power procurement planning, take measures towards dynamic tariff design, and also ensure improvements in revenue recovery. With this context, I would like to quickly go over the agenda. So I would like to request if we can move to the next slide, please. Thank you. We would have welcome remarks by Mrs. K. Saraswati. She's the Secretary General at the Madras Chamber of Commerce and Industry, followed by the overview and context setting of this webinar by Harsha Minawat from WRI. After that, we will have 4 presentations focusing on primarily looking at the analysis of TANGEDCO financials, how KUSUM C can actually benefit TANGEDCO's financial health, how community solar for domestic consumers could be an alternative, and finally, what are those challenges and opportunities that TANGEDCO can actually look out for given the emerging trends. Post this presentation session, we will have a Q&A, and then we would give summary points. So without further ado, I would like to first request Ms. K. Saraswati. She holds the post as Secretary General at the Madras Chamber of Commerce and Industry. She has more than 35 years of work experience, and out of which nearly 23 years are actually in the industry and trade development areas. She has worked with Tamil Nadu Small and Tiny Industries Association, and she has also coordinated science, innovation, and research activities between UK and India in UK trade and investment. Last but not the least, she has the honor of being the first woman Secretary General of the Madras Chamber in its 184 years of history. So we are really honored to have you here, madam, and would like to please request you to provide welcome address by inaugurating today's webinar. Over to you, madam.
Thank you very much, Sandhya. Thanks for that introduction. In fact, have done some of my part. You have welcomed everyone. So let me join hands with Auroville Consulting and WRI in welcoming you all for this program. Just a bit of the context why Madras Chamber is partnering here. As she mentioned, the chamber is 185 years young chamber. That's what we would like to term it. We don't want to call ourselves 185 years old because we have been staying relevant to the current needs of the members. So we take pride about that. And one important thing is we also started a sustainable sharing forum during our 175th year. Almost this is 9 years now with the SCF, what we call. We wanted to focus on energy, waste management, water and transport and greening, urban greening. In that we have been doing quite a bit on that. So that is, and also our focus being a Madras chamber, the old Madras is what we mean by calling ourselves a Madras chamber. It's all for Tamil Nadu. It's not just concerning only the Chennai region, the current Chennai region. The Madras here refers to the old territory, I should say, even part of Andhra, part of Kerala, part of Karnataka. But now, currently, our focus had been Tamil Nadu. And of course, we are also one of the promoted chambers of SHM on a national level. And we have been doing a lot of policy papers and white papers. I think that's why when Martin mentioned about this program, we knew this is a very important subject close to our heart, even under the Sustainable Sharing Forum, even under the policy kind of focus the chamber has been having. Because we all know there has always been a debate between the development agenda and the welfare agenda, as you mentioned, the tariff, things like that. Again, always have this issue. So early this year, we did a small white paper. I'm not getting into the details. I will leave it to Mr. Venkat to present it. He's the chairman of our energy committee. But that's exactly the reason. As you said, we have been a forerunner in renewable energy. We have number of credits. And probably I was thinking the title is quite long, but the way we have to travel is also long. Probably that's, and we have traveled a long way also because we knew we have been doing an event with the India Energy Forum, as Martin knows, for the last 8 years. We started it in 2012 when the situation was very grim. You know, even during our program, we had severe power cuts. We had to interrupt our programs. Today, we have traveled a long way. Fairly, we have improved. And even the DISCOM utility profile has changed quite a lot in the last 5-6 years, as you said. But still, we have a long way to go in terms of the huge accumulated loss. And that is why we also did a small white paper beginning of this year. And unfortunately, after the pandemic, we couldn't be forwarded it to the government, but we couldn't take it forward for discussion. So we were happy when Mr. Martin said, you are planning for this. And I know you have also been working on this area quite closely. So we were very happy to collaborate. And more details about this white paper I'm referring to will be presented by Venkat. So maybe I would just stop here and maybe I'll join the interaction after seeing the presentation. I'm expecting a lot of good deliberations to happen with all the expert speakers here. I could see and Josie, I welcome her, I welcome Harsha, I welcome Mr. Shankaranarayanan and all the participants here. So I'm looking forward as eagerly as you to know what further suggestions could come. Probably that is what had to be focused now with turning around of the thing and with doable suggestions, I believe. So let us just wait and hear the rest of the people. I would stop here. Welcome you all once again. Have a good day. Thank you.
Thank you so much, madam. And we are all excited to hear from all the speakers. I would like to now request Ms. Harsha Minawat. She's a Senior Research Specialist in the Energy Program at WRI India. Just to give a brief, she also works on policy research and analysis for WRI's energy access and clean energy transition work, which is focused on India. She will today provide an overview of TANGEDCO's financial situation by setting the context of today's webinar, and she'll also touch upon various factors that impact the financial situation, especially during pre-COVID and post-COVID times, revenue streams, subsidy regime, and other aspects. So over to you, Harsha.
Thank you so much for the introduction, Sandhya. I'll stop my video to ensure there's bandwidth for my audio. Good afternoon, everyone, and thank you for joining us at this webinar. Like Sandhya said, I will be presenting some information about TANGEDCO's finances to set the context for today's speakers. Can we move to the next slide and the one after that? Thanks. So the Tamil Nadu Generation and Distribution Corporation, TANGEDCO, was rated B by ICRA in the 7th Integrated Rating for State Power Distribution Utilities released by PFC and the Ministry of Power based on its financials of FY 2018. However, this rating is based on the fact that the government of Tamil Nadu is the unconditional guarantor for TANGEDCO. On a standalone basis, however, TANGEDCO is identified as a high-risk financial entity due to its cash losses, its poor capital structure, and low debt protection, at least in FY 2018. Its net worth was negative, and its total debt stood at more than 1 lakh crore. And FY19 saw its cash coverage ratio worsening to 0.8x from 0.87x in the previous year. As of March 31st, 2019, TANGEDCO's total borrowings were highest of all DISCOMs and integrated utilities across the country. So let's get into the contributing factors for TANGEDCO's financial situation. Next slide, please. The share of consumer categories in TANGEDCO's revenues from electricity sales has not undergone a significant change over the years, with industrial consumers contributing highest to revenues, followed by the commercial segment. However, domestic segment, which contributes highest to sales, are subsidized along with agriculture segment, which, by the way, does not contribute to revenues at all, despite accounting for 17% of sales. Moving forward, please. Under the directive of the government of Tamil Nadu, there is provision of free electricity of 100 units bi-monthly to all domestic consumers in all slabs. Additionally, there is either free provision of electricity or reduced tariffs for agriculture, huts, places of public worship, and HT services of lift irrigation cooperative societies. These subsidy transfers for these categories contribute almost 1/5 of the revenues of TANGEDCO. In 2016-17, under the government of India's UDAY scheme, the government of Tamil Nadu loaned 22,800 crores to TANGEDCO as an interest-free loan to be converted to a grant over 5 years. This action alone added 1.8% of the state's GDP that year to the fiscal deficit of the state. Beyond these subsidy transfers, CNI customers cross-subsidize other categories by paying a higher tariff with billing rates greater than the average cost of supply. Although this has become common practice across many states, this cross-subsidy between business and household users of electricity is eventually going to reduce the competitiveness of the private sector. It can harm economic growth, it can impact tax revenue growth, and the overall development of the state of Tamil Nadu. The cross-subsidy arrangements are already leading CNI customers to move to open access sources of electricity. And this migration of CNI customers is creating additional pressure on TANGEDCO to continue with increasing open access charges, which actually undermine the state's vision of moving to RE sources of electricity generation. Next slide, please. One of the most important factors affecting revenue recovery is that TANGEDCO itself has not filed for an increase in tariff since 2012. Although the TNERC granted a suo motu tariff increase in 2014, in the absence of a filing, after that, TNERC passed its 6th tariff order in August 2017, and the generation and retail tariff in this particular order will be applicable until the next order. And a tariff petition for this new order has not yet been filed. Next slide, please. But in the absence of an increase in tariff since 2014, electricity prices in Tamil Nadu have declined in real terms, and the gap between TANGEDCO's costs and revenues has increased. This can be seen clearly in the past financial years. While revenues for TANGEDCO grew at a modest 12% between FY17 and FY19, its expenses grew much faster at 28%. Power purchase costs, the biggest contributor to expenses, have been rising, and the gap between average cost of supply and the average revenue per unit has increased from 0.49 rupees per unit in FY17 to 1.32 rupees per unit in FY19. TANGEDCO has executed 11 long-term power purchase agreements for procurement of 3,300 megawatt of electricity for 15 years starting from 2014. Although given Tamil Nadu's overall electricity demand, 3,300 megawatt may not seem very high. But these long-term PPAs are taking up TANGEDCO's financial space on power purchase and possibly not allowing it to take advantage of procuring low-cost RE, which has seen a lot of reduction in rates over the last 1 year. Next slide, please. So even before the onslaught of COVID-19 on economic activity across the globe, the IMF, in its technical assistance report on Tamil Nadu's fiscal risks, identified TANGEDCO as one of the two main fiscal risks for government of Tamil Nadu, the other one being the passenger transport group. In this post-COVID-19 era, there is going to be increased uncertainty of overall demand in the economy due to slowdown of economic activity. This slowdown can further lead to contraction in government of Tamil Nadu's own tax revenues. There is already an expectation of reduction in central tax devolution due to this economic slowdown. In such a scenario, the GDP of the state is expected to worsen in FY21, and its after effects may be felt for a couple more years until probably FY23. All these factors are expected to strain the fiscal profile of the government of Tamil Nadu. So while in the pre-COVID era, where TANGEDCO's rating was decided based on government of Tamil Nadu's credit risk rating, in the post-COVID era, it is likely that government of Tamil Nadu's rating could get adversely affected by TANGEDCO's credit risk rating. So there would be a role reversal effectively. Next slide, please. So given these constraints, we would like to bring forth some potential levers for improving TANGEDCO's financial situation. As already mentioned, Mr. S. Venkatachalam of the MCCI will further elaborate on reducing power purchase costs, curtailing AT&C losses, and improving the realization of tariff from different consumer categories. On the theme of converting consumer categories to prosumer categories, specifically agriculture, for agriculture category, we have Mr. S. Narayanan, the General Manager of TEDA, who will provide us with an overview of Tamil Nadu's progress on Kusum Component C and its impact on TANGEDCO's financial situation. Following him, Martin Joffler will expand on AVC studies on community scale solar for domestic category, which can provide ways to reduce the subsidy burden on the government of Tamil Nadu. And finally, Ann Joshi will present in more detail about the flight of CNI customers away from DISCOMs towards open access and what TANGEDCO can learn from other states and DISCOMs facing the same challenges. So without further ado, handing it back to you, Sandhya, to move forward with the first presentation. Thank you very much.
Thank you so much. Thank you so much, Harsha, and thanks for setting the context. I would like to next invite Mr. S. Venkatachalam. He is the chairman of the Expert Committee on Energy at the Madras Chamber of Commerce and Industry. He has over 29 years of comprehensive achievements across business development, marketing, manufacturing, and profit center responsibilities with reputed multinationals and large Indian corporate groups. He is also the managing director at Orient Green Power Company Limited. It's one of the largest independent power producers. And over to you, sir, we would love to hear your thoughts on the profitability improvement levers for TANGEDCO. Thank you.
Yeah, a very good afternoon to all of you. Basically, we're looking at the profitability improvement levers for TANGEDCO by benchmarking with top DISCOMs. This was a study done jointly between the Madras Chamber of Commerce and Auroville Consulting. So basically, the purpose of that white paper was to identify the various levers, basically focusing on two areas, that's realization improvement and also the cost reduction initiatives that can be taken. In fact, we've done a very simple and short paper. Of course, in the previous speaker, very nicely covered the various aspects of the TANGEDCO's finances and the negative net worth and the overall loans that's covered. Overall, the losses, a significant portion of the losses, you can see the losses year on year. This covers up to FY18 because that is where we had all the data available from in detail. And a significant portion of the losses you can see between FY 2009 and FY 2015. This is when there were severe power cuts, power deficits, and procurement of power at high costs. And basically, as you mentioned, the highly subsidized domestic and agricultural consumers. The paper basically did a comparison of 3 or 4 top discoms which are similar in nature. There is Tamil Nadu with Gujarat, Maharashtra, and Bescom, because the overall Karnataka data, it was very difficult to cull out from the available data because none of them published their reports to the full, but we did for Bescom. Now, if you see the losses, the PBT of the various discoms, you can see it's going from negative, and it is only negative to a certain extent, minus 3.3%, and all going to a minor positive level because they're not really for profit industries. But they need to be to sustain themselves. Whereas TANGEDCO stands out in this particular graph at minus 14.5%, minus 11.5%, and minus 13% as the overall losses. That indeed is quite alarming overall. But now let's look at a few of the parameters. One is the average cost of supply. Now, the average cost of supply is basically derived from their own reports as the total of all expenses in the P&L divided by the units sold. And the ARR, that's the average price per unit, is the sum of revenue of power sales plus the subsidy received by the TN government and charges recovered from customers as per the PL profit and loss account divided by the unit sold. This is the basis in which we have done the study. The average cost of supply is basically at something like 7.1 to 7.7. It is increasing, whereas the average price per unit has not really increased much. In fact, it is only at about between 6 and 6.3 rupees per unit. So the gap has been, in fact, been widening. Now, in terms of realization improvement, if you say Ms. Harsha, they covered the actual turnover in terms of 17% for domestic and agriculture. But this is the actual number of units that is supplied. In fact, the unit price actually reduced totally from rupees 6.3 to 6.0. Now, there are 3 broad categories, which is basically the domestic, which is about 25,800 million units, agriculture, which is about 11,200 million units, and HT industry, which is about 32 million units, 32,000 million units. And the subsidized categories, which is the domestic and agriculture, is about 117% of the high-paying industrial and commercial customers, which the HT tariff is in the study. Also, we mentioned that the HT tariff is already fairly comparable with that of other states. And Tamil Nadu has had certain amount of competitiveness in terms of attracting the best of industry. And any further increase in the HT tariff is not really viable at this point in time. Now, looking at the domestic tariffs, on an average, Karnataka is at about 5.68. The other states, that is Gujarat and Maharashtra, are far higher. And it on an average, based on the calculations, is at 3.88, based on the annual reports of the discounts. Now, TANGEDCO, really speaking, has got lower demand and energy charges and a lower number of slabs. In fact, it is only between 30 to 50 rupees per unit. Whereas if you see the energy charges in Maharashtra is between, the fixed charges for Maharashtra and Karnataka and Gujarat have far more number of slabs. Whereas when you come to the energy charges, Maharashtra goes up to about 1265 per paise per unit for greater than 500 units per month. And for greater than 250 units per month for a consumer, it goes to about 1137 paise per unit. Similarly, Karnataka is also far, far higher at 780 paise per unit. So as Ms. Harsha mentioned, there's been hardly any tariff revisions over the past 10 years. And there is definitely a potential to revise the tariff structure, especially that of the domestic. Whereas the agriculture is fairly comparable. Tamil Nadu is about 3.3 rupees per unit. Bescom is at about 3.34 per unit. But definitely in agriculture, the key and important factor is that the metering has to be done 100%, which is, I think, where we are far lagging behind quite a bit. So the domestic tariffs Definitely with the higher slabs, as you mentioned, there is free power up to about 100 units for each and every consumer, even people who own air conditioners and so on and so forth, which I think there is definitely, this is not, I mean, it can be subsidized for the lower consumers, number of consumers who consume a far lower number of units. The average cost of supply, if you can see the comparison, I just covered that Tamil Nadu is between 7.1 and 7.7, whereas the other states are far lower. And Gujarat obviously tops in all these categories. It's at about 5.5 and it's been steadily reducing year after year. Now looking at the average cost of power, which is the production on it from its own units, TANGEDCO is at about 4.86 per unit, whereas Karnataka is at just about 4 and Maharashtra is at a similar level. Therefore, there is a significant potential to reduce the average cost of power from its own generating stations. Apart from that, okay, the purchase of power from outside is definitely one area where TANGEDCO can do a lot because we are already fairly covered in terms of the generation capacity. So that could be minimized and also could be because there are number of systems available now to purchase power at much lower cost. Further, the adherence to merit order dispatch definitely will help reduce costs. In fact, the must-run status has to be maintained for the renewables, etc., which are fairly cheap. But the merit order dispatch has to be followed for the other this thing, and that in order of increasing variable costs. The other figure that we calculated with the actual T&D losses in Tamil Nadu has been maintaining about 20%, which is indeed quite alarming. Whereas Karnataka, the KPTCL is between 16-17%. Definitely, again, DGVCL or Gujarat is far lower in this category as well, and almost at the ideal levels that it should be at. Overall recommendations are that the domestic tariffs, only by just comparing with Karnataka, we don't even have to go to the levels of Maharashtra and Gujarat, etc. The impact itself would be about 4,600 crores. Optimizing cost of power purchase and reducing the variable cost of unit of its own generation. And also, as I said, the monitoring the power exchanges very closely can have an impact of another about 2,000 crores easily. I mean, only comparing with, we're not even comparing with the best because they are far more evolved. In fact, Gujarat has gone many stages ahead, but we need to take these first steps forward. Then apart from that, the controlling the T&D losses, that is metering of distribution transformers, the feeder bifurcation, adoption of the new APDRP, the compulsory metering, energy audits, IR meters, new substation, a whole lot of things that can be done. And we're just talking about from going down to about 20, 21% to a level of 16-17%, 4.3% impact will have a clear impact for 2,200 crores. So in this page itself, we can see something like 8,000, 9,000 crores worth of impact by just a few simple measures. We've kept the study as simple as possible so that the maximum results can be obtained by some very minimal actions from there. With that, I end my presentation and we can cover more details if required during the question and answer session. Thank you very much.
Thank you so much, sir. Thank you so much for sharing the facts as well as covering significant suggestions in terms of what could be the path that TANGEDCO can follow to improve its financial health. I would like to next invite Shri S. Shankar Narayanan, General Manager, Tamil Nadu Energy Development Agency. Just a quick intro, he joined Tamil Nadu Electricity Board in 1987 and served the organization in various capacities. He also served as General Secretary at Navy Engineers Association during 2011 to 2013. And at TEDA, he actually drives Kusum C, and phase 2 of rooftop solar program TEDA, and is also looking after the solar village pilot. Today, he'll share with us about Kusum C and how it could improve TANGEDCO's financial health and benefit the state overall. So over to you, sir. We are really honored to have you here. So would you like to share a presentation or would you like to share thoughts? So we are not able to hear your voice.
No, video. Now, one second.
Yes, sir,
Is it visible now?
yes, sir, we can see you.
Is it audible now, ma'am?
It's audible.
Yes, sir.
Yeah. Well, we can go ahead with the presentation.
We want the presentation on the screen, Naren. Yeah, it does come.
Yes, sir. You can share the screen, sir. The bottom of the page
Yeah,
there is a share screen option.
Hmm?
Share, sir. Presentation.
Common share lo put. Ingin edukku.
Yes, sir. We can see the presentation.
You can see the presentation, ma'am?
Yes, sir. Yes, sir.
Go ahead. Yeah.
Fine.
So good evening, all of you. I first please accept my apologies for coming late to this presentation because I was held up with the MD ESL who was on a sudden visit to Chennai and met our energy secretary and other people. So I was sorry I got delayed. And first of all, my greetings on the day of energy conservation. That is 14th December. We used to celebrate Energy Conservation Day. So on behalf of TEDA, I extend my warm greetings to one and all who is attending this webinar. So let me go through this. So as you all aware, MNRE allocation to the state, that is for Tamil Nadu, we have got about 20,000 numbers of allocation for implementation of Kusum C scheme. Our Honorable Minister for Electricity, Prohibition and Excise made an announcement in the floor of Assembly on 31/5/2008 about the solar energy producing farmers scheme prior to launching the Kusum scheme. Subsequently, administrative sanction for this scheme was accorded by the Government of Tamil Nadu via GO 39 dated 21/8/2019 by including the PM Kusum scheme also. About the PM Kusum scheme, many of you all know about this, and we have been in getting consultation from Auroville, and at this juncture we thank Auroville and WRI. WRI, we used to have consultations for the grid connected rooftop and all other storage programs as well. And at the outset, I want to thank both the Auroville and WRI on this occasion. Before going into about PM Kusum scheme. So about PM Kusum scheme, farmers having grid connected agriculture service, that is free connection, will be supported with a solar power plant at free of cost. And then individual farmers, water user association, community cluster based irrigation are eligible under this scheme. Target about 20,000 numbers on pilot basis out of the existing 21 lakh agriculture connections in the state of Tamil Nadu, which includes about 4.5 lakhs numbers of 7.5 HP. Actually, on the pilot basis, we are planning to go in ahead with the 7.5 HP, for which the solar power plant capacity will be about 11 kilowatt. The financial pattern is about the Government of India central financial assistance will be 30%, and the state government subsidy is about 30%. TEDA's investment on behalf of farmers' contribution is 40%. Actually, in all other states, 40% of the project cost is borne by the farmers' contribution. Since we are having free connections for the agriculture in Tamil Nadu, the government has ruled out that issue, and they have instructed TEDA to raise the farmers' contribution of 40% through external borrowing through the Tamil Nadu Infrastructure Fund Management Corporation, that is TNIFMC. So actually, when we look at the cost analysis for each system, it is about the benchmark cost was proposed was 48,000 per kilowatt, so which works out to 5,28,000, and the MNRE share will be about 30%, 1,58,400, and the state government share is 1,58,400, and TEDA's investment through TNIFMC is about 2,11,200. So in the pilot scheme, the farmers having 7.5 agriculture pump sets are likely to be included in this scheme at the first instance. About TEDA's investment, we have been having discussions with the TNIFMC for availing this 40% loan on behalf of the farmers' contribution. And TNIFMC in principle agreed to extend loan to TEDA for implementation of the scheme. And also we submitted a financial model to TEDA, and through TNIFMC held a preliminary online discussion with the IFC also, International Financial Corporation also, on 4/8/2020. So benefit to the farmers is, because of the scheme, there will be continuance of free electricity for irrigation, and there will be no investment, absolutely no investment, but there will be an additional income for the farmers in the form of an incentive. Farmers will receive reliable daytime supply along with the existing power availability. Farmers can sell excess power to grid and increase their income. Note, the proposed incentive is likely to be 3,000 to 15,000 rupees based on the TNRC's tariff order. Farmers will be incentivized to conserve energy as well as groundwater with enhanced and assured irrigation. So these are all the benefits to farmers, and the benefits to government or TANGEDCO will be cost savings for TANGEDCO. As SAR was telling, the average cost of supply for the last year was about 476, which was previous ACS, and now it was told that the average cost of supply is about 8 rupees 04 paise, and if you look at that, out of this 8 rupees 4 paise, about 372 is being given by the government of Tamil Nadu as subsidy, and the balance has to be borne by the TANGEDCO. That is the issue. And out of this, TANGEDCO, TEDA has filed a tariff petition, and TNRC has given approval for the gross generation of by TEDA, the solar units generated at ₹2 rupees 28 paise. So we have been discussing with TNRC whether we can go ahead with this tariff or so. So the cost benefits will be, see, only in this project you have win-win situation for all the stakeholders, whether it is farmer or government or TANGEDCO, everybody wins it, including the TEDA or TNIFMC. So the cost savings for TANGEDCO and free supply to agriculture, no additional electric load on the grid for agriculture pumps, cost savings on agriculture subsidy, distributed generation at lower cost, reduction of T&D losses for generating station to distribution point, improved power quality, meet RPO obligations of TANGEDCO. It will provide a flip to the emerging green economy and reduction in carbon footprints and the conservation of water resources. So these are all, as you all know, so this is where we have mentioned that average cost of supply is taken as ₹8 per kilowatt, which is yet to be released. So the role and benefits, as you all know, the government of India provides 30% subsidy for, and the benefit is achieve the proposed solar targets. for Government of Tamil Nadu provides 30% subsidy, reduce government financial burden on agriculture, electricity, energy subsidies. For TANGEDCO, it procures generated solar power under the scheme from TEDA and disperses to farmers' incentives. So there will be a substantial cost saving for TANGEDCO on the supply of free electricity, free supply to agriculture sector, and the TANGEDCO stands to gain by way of complying with the RPO. TEDA, as an implementing agency and to fulfill the objectives of Tamil Nadu solar energy policy, stands to gain, and availing loan for farmers' contribution. TEDA will own and maintain the plant for 25 years. For the farmer, those who are willing to participate in this scheme, there will be voluntary participation and provide a piece of land for installation of the solar PV power plants and continuance of the free electricity for irrigation without any investment. So as of now, the TNRC has issued orders for the maximum tariff of about ₹2.28, for which we are going to have discussions with the TNRC and the TNFMC to proceed further in this regard. And I request all the stakeholders to give their comments, or all the viewers can also give comments. In fact, we have been working with Auroville and WRI for all these schemes. I hope we will implement this scheme in a very in a good manner with all your support and guidance. Thank you so much. I would like to thank MCCI for extending their support, and Venkatagalam sir used to be our speaker always, even in our SDPC also. Sir used to speak and he used to guide me a lot. Thank you, sir. On this occasion, I would like to thank MCCI also. Thank you so much, all the participants. And I would like to hear the comments, and if there is any questions, I'm ready to take.
Thank you so much, sir. Thank you so much for sharing all the details on the scheme. We are really, and the details are extremely important. So we are really honored to have you here. Thanks for spending the time. We have 2 more sessions, sir, by Martin and Anne. Post that, we are planning to have Q&A session. So we have a couple of questions that have come in, which we will take up after around 15 minutes. I hope that is okay with you.
Okay, okay.
Okay, thank you so much, sir. I would like to invite Mr. Martin. He's the co-founder at Auroville Consulting. He's currently engaged in power sector reforms, research and policy advocacy for distributed renewable energy generation and applied R&D for accelerated system integration of renewables. Today, he's planning to present findings of the work on community solar for domestic consumers as an alternate to electric subsidies. Over to you, Martin.
Thank you, Sandhya. And welcome everybody. So mine is quite a hypothetical.
You have muted yourself here.
Can you hear me again?
Yes, thank you.
All right. So mine is a little bit of a hypothetical high-level exploration, asking the following question: what if tariff rationalization for the domestic consumer segment is being introduced? And if the government decides to mitigate the financial impact on the domestic consumers, is direct benefit transfer, that means a direct cash transfer, or a community solar energy program, a more attractive solution? Now, this is roughly what I'm trying to cover, and of course, a lot of elements on TANGEDCO's financial situations have been covered, so I will not dwell on this too much. A little bit on subsidies and cross subsidies, and then finally 2 alternatives that I would like to explore with you. On TANGEDCO's finances, and I guess Mr. Venkat also has really summed it up very well. If you look at the table on the top, so this is the approved, that means by TNSC, approved revenue gap of TANGEDCO for 5 financial years from 2011 to 12 to 2015-16. So what you can see clearly is that the revenue gap has been increasing consistently. We also talked about outstanding debts by TANGEDCO, which was in 2000. Outstanding payment to generators is another topic. As of May 2020, outstanding payment was 16,000 crores, which equals about 15 months of power purchase of TANGEDCO. Now, what we see in this chart is for a number of years, you see the domestic average tariff rates per slab, which would be the 4 lines at the bottom. And you see also 2 different average costs of supply. One is as per TNAC tariff order, which is the brown line. However, if one were to calculate the average costs of supply as per TANGEDCO's balance sheet, one consistently finds, taking those numbers, that the average cost of supply of TANGEDCO is higher as compared to the TNAC values. Now, a little bit to what are subsidies and cross subsidies for those listeners that may not be so familiar with the power sector. Direct subsidies are subsidies that are given by the government and are mostly determined on a per kilowatt hour basis and are directly dispersed by the state government to TANGEDCO. Whereas cross subsidies are typically levied on certain consumer categories like the industrial and the commercial consumers that have higher tariffs, in order to subsidize lower electricity rates, for example, for those ones for agriculture or domestic consumers. Now, some of our colleagues already mentioned that, of course, a lot of the high-paying consumers are in the HD consumer category, and especially HD consumers have the opportunity to migrate to alternatives such as open access. What you see here is 2 bar charts. One is the open access consumption as a percentage of the total HD consumption in 2015 and 16, which was about 40.17%. And you can see an increase from the 2015-60 financial year to the 2060-70 financial year on open access consumption from a 40% to about 46%. Which means that TANGEDCO will be able to get less cross-subsidy from those consumers to subsidize the lower electricity rates. And this is, of course, one of the contributing factors to TANGEDCO's poor current financial performance. This is a chart that shows the subsidy allocation by the Tamil Nadu government to different consumer categories. The orange area at the very bottom is the subsidy allocation for domestic consumers, which at the financial year 2018 and 19 stood about 3,000 crores. And the 2 brown colored areas above are representing the subsidy given to agriculture, which is about 4,000 rupees in the financial year 2019 and 2020. Now, I wanted to look a little bit closer when we look at subsidy allocation for domestic consumers. And I'm talking here about both the subsidy by the government and the cross subsidy. There are about 21 million domestic service connections in the state. 69% of those ones are falling into slab 1 and slab 2 consumers. And slab 1 and slab 2 consumers account for about 26% of the total domestic electricity consumption. They receive about 60% of the subsidy by the state government, and only about 30% of the cross subsidy from TANGEDCO. And if you add up subsidy and cross subsidy, slab 1 and slab 2 consumers receive about 39% of the total subsidy disbursement, whereas higher domestic consumers in the category slabs 3 and 4 receive about 61% of the total subsidy. The reason why I do find this interesting, because it indicates clearly that a majority of the subsidy is directed towards higher domestic consumers, like 3 and 4, And one could also assume that consumers in slab 3 and 4 are of the higher income class. That means that the current subsidy is directed towards the higher income classes or income households rather than the lower income households. Now I'm showing you the same data, but in a different representation. So this is the average annual subsidy and cross subsidy combined for a typical domestic consumer in the 4 tariff slabs. So a slab 1 consumer in total amount would receive about 4,655 rupees of subsidy per year. And you can see the higher the slab and the higher the electricity consumption, the higher the annual subsidy those consumers receive. So it goes up to about 17,000 rupees per annum for slab 3 and for slab 4. Now, this is really, as I say, this is a hypothetical exploration. The question is, once tariff rationalization is introduced and the state government were to decide to mitigate the impact on certain domestic consumers, what would be a better alternative? Is it a direct benefit transfer, or could it be a large-scale community solar energy program? There's a lot of assumptions that were packed in, and we have done 3 steps in the analysis. Step 1 is that all domestic consumers will see a tariff rationalization where the tariff is a single tariff and will be increased from the current tariff to 7 rupees per kilowatt hour. In parallel, the demand charges will also increase, so that the average billing rate will be higher than TANGEDCO's cost of supply, or equal, at around 8.28 rupees per kilowatt hour. Step 2 is then to explore the opportunity with community solar and focusing only on slab 1 and slab 2 consumers, where all slab 1 and slab 2 domestic consumers are transitioned to have a share in a community solar energy system under a net feed-in mechanisms. And then compare it to the business as usual case. That means if no change were undertaken. And the assumptions that were packed in there are the following. First one is an increase in the solar net feed-in tariff from the current 2.28 rupees per kilowatt hour to something that is closer to the actual cost of generation from rooftop solar, which could be in the range of 4.8 to 5 rupees per kilowatt hour. The second one is that all slab 1 and slab 2 consumers receive a share in a ground-mounted community solar energy system of 1 kilowatt per service connection. Next assumption is 80% capital subsidy by the Tamil Nadu government, on account that the Tamil Nadu government can phase out electricity subsidy and turn an OPEX problem into a CAPEX problem, where a one-time investment can be done in terms of providing subsidy for community solar energy system. 20% of the investment could come from the consumers, and that could be partially financed with equity and on debt financing, which could be facilitated with an on-bill financing mechanism. And we have assumed that the solar self-consumption potential of an average domestic consumer in Tamil Nadu is 39%. And the surplus solar will then be fed into the TANGEDCO grid at the tariff that we have proposed initially, which is a 4.8 rupees per kilowatt hour. Now, for the direct benefit transfer, we have assumed the following, that all former domestic slab 1 and slab 2 consumers receive a direct benefit transfer, which is equal to the current subsidy and cross-subsidy benefits. That means that they wouldn't feel any pain on the tariff rationalization. Now, this is the first result which shows the impact of tariff rationalization on the 4 domestic consumer slabs. So you could see, for example, that for slab 1 consumers, the impact of this tariff rationalization would be an increase over 25 years in terms of net present values of a substantial 2,761%. You could also see that for higher consumers like slab 3 and 4, the impact is more moderate, with a 74% increase for slab 3 and a 17% increase for SLAB 4. For TANGEDCO, of course, the gains are substantial. They would have gains from 111% for SLAB 1, 120 for SLAB 2, 83% for SLAB 3, and a very moderate gain for the SLAB 4 consumers. The Tamil Nadu government, in this case, would of course have a gain of 100% on account of phasing out subsidy disbursement altogether. Now, and this is a quick summary of the alternatives. So the alternatives are community solar, where SLAB 1 and 2 consumers have a share equal to 1 kilowatt, or direct benefit transfer. So if we look at the impact on the consumer, the community solar program would result into a gain for SLAB 1 consumers of 650% over 25 years, and a gain to SLAB 2 consumers of 34%, whereas the direct benefit transfer, which has been designed to mitigate the tariff rationalization, but not to increase basically the financial bottom line for domestic consumers, results in zero gains to the consumers. If you look at TANGEDCO, even here the community solar program has higher gains as compared to the direct benefit transfers, which is primarily on account of the surplus solar energy from those domestic consumers that is fed into the grid at a cost of about 4.8 rupees per kilowatt hour, which is far below the cost of supply. Looking at the impact on the Tamil Nadu government, you see a moderate loss of 5% for SLAB 1 and 16% for SLAB 2 consumers for the Tamil Nadu government, and a substantial increase in subsidy disbursement if we talk about the direct benefit transfer. Now, talking again about the impact of the Tamil Nadu government, the losses that I show here for the community solar program of 5 and 16% can be mitigated because the subsidy allocation for SLAB 3 and 4 consumers will be phased out entirely. This is a high-level overview. So, of course, this is really hypothetical. So it would need about a 12 gigawatt of community solar capacity for SLAB 1 and SLAB 2 consumers, which are gross capital cost of about 43,000 crores, in a consumer share, which is 20% or 8,620 crores, and a net capital cost to the Tamil Nadu government of 34,000 crores. Now, if Tamil Nadu were to decide to do a community solar program for all its SLAB 1 and SLAB 2 consumers, the total cost, including the cost of financing for the government, would be about 36,000 crores. The reduction in subsidy represents about 59,000 crores. Therefore, there would be a gain for the Tamil Nadu government of 23,000 crores or 39%. Equally for TANGEDCO would have substantial gains of 229,000 crores and gains in the range of 103%. I've done a quick back on the envelope calculation, assuming that TANGEDCO were to invest 25% of these gains into energy storage system, it could deploy about 32 gigawatt of storage capacity, which represents about 50% of the daily solar generation from those proposed 12 gigawatt of community solar energy systems. Of course, there is additional impacts in terms of socioeconomic and environmental impacts. The job creation potential of such a program would be about 79,000 full-time employment equivalents, a substantial reduction in greenhouse gas emissions over 25 years. And the solar generation from this 12 gigawatt of community solar would represent about 23% of the total energy in the financial year 2018 and 2019. Just to sum it up and to conclude, so direct benefit transfer or community solar energy can mitigate the impact of a tariff rationalization on domestic SLAB 1 and SLAB 2 consumers. Community solar is financially more attractive and is a winning proposition for all stakeholders. That means the consumers, TANGEDCO, and the state government. Some savings to TANGEDCO and the Tamil Nadu government may be reinvested into energy storage to manage the higher RE penetration. And of course, wind community systems may be also considered along with solar community systems to diversify the RE sources. Thank you.
Thank you so much, Martin. Thanks for sharing your thoughts, especially with respect to community solar. Now we have with us our last speaker, that is Ms. Ann Joshi. She's a fellow at Prayas Energy Group. She has extensive experience working in Maharashtra's power sector, and she's also studied and understood various governance-related issues, along with the growing role of market operations in the sector and the progress of rural electrification. So without much delay, I would just hand it over to you, Anne. And she's going to present primarily on challenges and opportunities for TANGEDCO given the emerging trends. Over to you, Anne.
Thanks, Sandhya. So since many presenters have covered the agricultural segment and the domestic segment within TANGEDCO, I would like to focus a little more on TANGEDCO's overall finances and also this C&I segment. I mean, commercial and industrial consumers are supposed to cater to the largest sales for TANGEDCO. So we can just take a look at this segment a little more. So one thing that I would like to state up front is that the cost of supply of TANGEDCO is within the range of 8 rupees per unit. It is rising at about 8% per annum as per PFC. Quite a significant needs to be seen in the context of the fact that most commercial industrial consumers with their fixed and energy charge pay a little higher, 9 to 10 rupees, but they're able to get power from alternate sources, whether it is through open access or by setting up their own captive generating plants or investing in captive generating plants at about 5 to 6 rupees per unit. So there's significant savings for these consumers to switch to alternate models of supply or reduce their dependence on the distribution company. Now, in the past also, whatever data of TANGEDCO sales is, the quantum, the comparable quantum of the open access and captive in Tamil Nadu over the years, which has developed. So a large segment of industrial consumers have already shifted their significant demand to TANGEDCO's finances. And that can also be seen with this very simplistic representation of, where do I recover money for this average cost of supply on a per unit basis? If I have to recover for this 8 rupees per unit, where does that money come from? So from the PFC report, we can say that about 59% actually comes from the revenue. Only 59% comes from revenue from consumers. 15% comes from subsidies. 23% is through losses. And that is also because TANGEDCO hasn't had a tariff revision from TNERC in a very long time. But only 3% is the contribution of cross subsidies, specifically from these commercial and industrial consumers. And over time, especially even if there is tariff revision, if this number has to go up from 9 to 10 rupees to higher, it would just increase the pressure for more and more sales migration. So the 2 points that I want to make is that the role of cross subsidy over time has already reduced in Tamil Nadu. And say with increase in sales migration, it is going to reduce even further, which means that it is most likely that consumers, if they are paying higher than their cost of supply, would find alternate sources. If they pay at cost of supply, then the burden of past liabilities actually will rest with smaller consumers, and the role of subsidy has to increase, which is a very severe problem for TANGEDCO. And most of the sales migration at these sources. And that is because of their modality, scalability, and of course the fact that TANGEDCO has a significant amount of wind and solar resources. So the point that I want to make is that currently, the utility is going with this model that it is supplying to all consumers. It is the dominant user of the grid, and the cross subsidy model will work. But eventually what is going to happen, because of the inevitability of sales migration, is that more and more going forward, it will be only the smaller consumers who remain with the utility. It will be more of a wire service provider than the user of the entire grid. grid and catering to all of states' demand. It will be more of a wheeling service provider and maintenance of wire service provider. And new revenue models need to be really thought of. Now, to move from done, and if they're not done soon, then a lot of avoidable costs can be there. The impact will be much more on small consumers, and we'll be looking at much bigger bailouts going forward. So one case that I would like to emphasize here is TANGEDCO's capacity addition. Now, Harsha has already mentioned the kind of capacity addition that has taken place in the recent past. And she also mentioned that power purchase plays a huge role in cost. So power purchase contributes to about 75% of the cost, and more in TANGEDCO's case. And their cost of supply is increased. That is planned. There about 5,000 megawatts under construction. Additional 11,000, all of it through a cost plus rather competitive route. All of this is coal-based power, and this will definitely contribute to the cost of supply in the future, as these costs are going to increase over time. They're not going to be staying fixed for 25 years. And the other big question is, if there is so much of uncertainty in demand with your largest sales contributor possibly having every incentive to migrate away from the distribution company, what is the rationale for having a 25-year base load capacity going forward? That is a real question that needs to be evaluated. So in this context, I would just like to highlight an example from Maharashtra. Maharashtra also had a very similar experience. The generating company had about 6,090 megawatts in the pipeline, and Maharashtra initiated, the Electricity Regulatory Commission initiated a suo motu process in 2017 and approved only 30% of that capacity in the pipeline. The rest by the utility, given board approval, was kept under abeyance. And only 1/3 of that was actually approved based on the assessments that were done. So that was one example. The other was to evaluate a lot of this baseload capacity addition without any coal-based capacity addition in the future. In Maharashtra, Maharashtra can have a system where 50% of its power is coming from renewable energy sources by 2030. And this could be the least cost option without any thermal addition, with some amount of storage investment. So this is a radical change from the kind of power procurement that is being planned by many states. So no more base load contracts, no more coal thermal capacity, base load coal thermal capacity is definitely a reality going forward. And that kind of alternative should be assessed. So we really feel that TN can also initiate some sort of process to evaluate this capacity in the pipeline. There's already an ongoing capital investment plan process before the TNERC, which seems appropriate for that. And also the role of storage and sales migration should definitely be evaluated as part of that. So two tenets that we would like to focus on is that, since there is uncertainty in demand, maybe TANGEDCO need not plan for large consumers. Let large consumers, bear the brunt of the vagaries of the market and source their own power procurement and get that freedom to choose where they get their power from. And the focus of TANGEDCO can be much more on smaller consumers. So in this context, how do we get freedom for larger consumers could be sort of broken into these 5 C's, as I call them. Clarity and certainty. I think policymakers in Tamil Nadu regulations, and that will also reduce the scope of litigation. Whenever I look at TANGEDCO's website, there's so many cases, most of them through open access and captive consumers. There's so much of litigation, even with the, how do you really look at captive and which agency has a jurisdiction for assessing captive? That was a recent sort of litigation that had happened. So all of this can be avoided with a lot more clarity. Then, of course, providing a lot more certainty in terms of charges and procedures. At least for 5 to 7 years, charges for open access and the processes should remain the same. That gives a lot more confidence for investors to sort of take commercial risks going forward. And before any major change happens, some adequate adaptation time should be provided. Like in Maharashtra's case, what we had seen was grid support charges were supposed to be introduced for rooftop consumers, nominal charge that they had to pay. But the rule that, that will only be charged once, 2,000 megawatts or so. Right now it's at 450. So that gives enough of an adaptation time for developers and consumers to sort of do something about these rules. The other important tenet is, changes will be introduced as a choice rather than a diktat. So, instead of saying consumers have to go for net metering and gross metering, as long as there are adequate compensation for grid service and other charges that are being provided. Another example is changing contracted demand. For large consumers, the flexibility of whether to retain the amount of contracted demand that they have with the utility or to reduce it should be with them, rather than the utility automatically reducing it, as is there in some states. The third, and this is a slightly provocative one, is to look at convergence. Captive and the treatment of captive has come from the Electricity Act in 2003, where most of the captive systems in India were coal-based. With renewable energy and its modularity, maybe we can think of moving or having some sort of convergence for open access and captive and its treatment, which would also ensure adequate compensation for the utility and a much more stable sort of route for the sector to grow in. Another idea is, which TANGEDCO also had some time ago, was to provide open access options for less than 1 megawatt consumers. Why only 1 megawatt? Why not 500 kilowatt or even 100 kilowatt going forward? Because getting more and more consumers to migrate away would also help TANGEDCO not to add more capacity going forward and focus on much smaller consumers and shrink the pie per se. And of course, the last is, of course, policy concessions can be removed in future RE policies for open access and captive options, because those projects come forward in the future may not need these concessions given falling for RE prices. The other example I would like to talk about compensation. So provided there needs to be compensation. It's not just enough to give options to consumers that are there with the utility cost. There are services that are being provided. So these need to be compensated for. So one is, of course,
And we are
including
kind of losing,
there's in-kind vendors.
Sorry, we are losing you actually.
Can you hear me now?
Yeah, yes, please. Thank you.
Hello?
Yes, we can hear you now.
So one kind of service that is, one kind of service that is provided is the banking service. And that is, usually a percentage of the energy that is banked, that is taken as the charge. That really doesn't compensate the utility for the kind of power purchase cost it incurs at a particular time of banking. So moving away from this in-kind service to much more of block-wise evaluation useful, such that, when the consumer injects power, it should be valued back down at that time. In a sense, that's the opportunity cost in that 15-minute block, which the utility is incurring. And when the consumer is drawing the banked power or is unbanking the power, it should be valued at the market price or the variable cost of the highest dispatch power, the highest variable cost of the dispatch power at that time. Because again, it values the service that is being provided by the utility given its power purchase tax. So that could sort of summation of these 15-minute block adjustments over time could give you the monthly bill, rather than just having it as a percentage of your banked energy. So that's some idea to go to a much more real time, actually valuing the grid service provided by TANGEDCO. Any of these charges in the past need to be revised. One is, of course, electricity duty. Many states have amended their act to increase electricity duty for captive plants. In Tamil Nadu, it's about 10 paise per unit. In Maharashtra, it's 1.5 rupees per unit. So that sort of increase in duty could also help provide transition finance to the DISCOM. Then the other is, of course, 50 rupees per kVA. Maybe it can be increased to about 25% of the demand charges for the captives. And also some sort of standby service can be provided for the captive unit, which pays this charge. And the third is, of course, something that Maharashtra has been trying for some time, is to look at behind the meter systems and their registrations and charging a nominal fixed charge for behind the meter systems over a period of time, again, to compensate the utility for the days to come where its finances are going to be severely affected. Couple of other ideas I'd also like to discuss is, of course, with net metering, again, from a compensation point of view. Instead of saying net metering will not be allowed for a huge segment of consumers, one can think of having some sort of nominal charges which compensate the utility for the banking, wheeling, and balancing services being provided, so that it's about 1 to 1.5 rupees per unit. Because for a lot of consumers, it would still make sense to have net metering, especially commercial and industrial consumers going forward. Then, of course, time of day metering. Why is it only restricted to, you can do 10 kilowatt consumers? Time of day meters, TOD meters are quite economical now with the recent fall in metering technologies, fall in prices for metering technology. So that can be taken advantage of, and lower and lower segments can be having TOD metering systems. And Maharashtra is also contemplating that in its midterm review in a couple of years. Other option is, of course, looking at not just having TOD regime for more and more consumers, but also looking at seasonal variation in your time. Charges are typically fixed for this, and it remains the same all through the year. And it really doesn't take into the fact that renewable energy is sort of going to make a big difference to your load and your supply going forward. So what we had suggested was, from 9 to 5, which is during the solar hours, there is no need to have a TOD rate. And during the shoulder periods, which is 6 to 9 and 5 to 10, so in the morning, in the evening, there can be some rate, because those are the stress periods. Can you hear me now?
Yes, Anne. Yes, clearly.
Hello?
Yes, Anne, we can hear you.
Those are the stress periods during the year, or during the day. Okay. Those are the stress periods during the day. And during the night, of course, there has to be some rebate being provided because of off-peak charges. That's on a daily basis, but on an annual basis, there can be a revision in the time of day rates as well. In the Maharashtra system, we saw that the stress months were April, May, October, and November. And the monsoon was the time when there was a lot of power because of wind. So understand which are the stress months and which are the months where there is significant renewable energy power. And there is a certain modification to the TOD rates. So for example, in the stress periods, there is an additional charge during the shoulder periods of 6 to 9 and 5 to 10. And in the monsoon, there is an additional rebate for night consumption and the evening consumption, because of the fact that there is a lot of wind generation, wind availability at that time. So these sort of changes could manage power procurement better and also compensate the utility for the kind of services that are being provided. So to conclude, I would just like to say that it's inevitable. It's going to stay, especially with heroic efforts, if TANGEDCO is not able to very drastically. So therefore, there is a need to change TANGEDCO's business model itself. Makers should focus on avoiding any base load capacity addition, especially without rigorous assessments, because it will contribute significantly to costs and add to stranded assets, resource lock-ins. And once a contract is signed, it's legally and contractually very difficult to rescind or get out of that contract. So it's better not to have any future capacity addition. Second is, of course, encourage long-term migrant consumers. It will reduce demand uncertainty and reduce the obligation of the utility to plan for a lot of the power. Is to focus on supply and service quality on small consumers. This I haven't talked about much here, but we have written a lot about it. Especially because the burden of the transition shouldn't be borne by them if larger consumers are migrating away. So without these steps, there's a grave risk of having stranded assets and massive bailouts in TANGEDCO. And this is why we feel such measures should be undertaken. So I'll end with that. Thanks, Sandhya.
Thank you so much, Anne. This was really useful, and it provides a transition pathway, I can say, for the utility to take various steps. Since we are falling short of time, I would just quickly jump into the Q&A. So the first question would be for Mr. Shankar Narayanan. I'll just pull up the question. I think it's been answered, but I could still put it for him. Okay. Shankar Narayan sir, one question was, who is responsible for repayment of loan for farmers' contribution component, whether it's TEDA or it's farmer? And what kind of communication channels are being pursued by TEDA with farmers, especially to encourage their participation? I think he's,
Sandhya, in case Mr. Shankar Narayan is not here, I could also answer this.
yeah, please do. Yeah, thank you.
So the KUSUM-C in Tamil Nadu will be implemented as a RESCO model, where the RESCO in this TEDA gets compensated for the gross solar energy generation at a tariff that has recently been determined by TNESC at 2.28 rupee per kilowatt hour. And then, of course, TEDA will use this revenue for repayment of the loan, which is about 40% of the total capital requirement. So there is no investment from the farmer. The farmer will in turn get a financial incentive, which is calculated on the net export of solar energy multiplied by a rupee value, including a time of the day component as well, in order to incentivize the farmer to pump primarily during sunshine hours and to reduce his water and energy consumption.
Thanks, Martin. So this question again is for Mr. No, this is for Mr. Venkatachalam. This says, what are the challenges with respect to adherence to the merit order dispatch in Tamil Nadu, and are there any specific challenges related to that?
Yeah, basically, see, Tamil Nadu has come a long way in terms of, first of all, absorbing the renewable energy itself. As you know, there's almost about 40% of the installed capacity is renewables, and managing that kind of renewables in the grid has been a challenge, but they have overcome it a long way, and they're evacuating over 95% of the renewable energy, and that's been our experience because we've got a number of wind assets in Tamil Nadu itself. Since they have mastered that art of managing the renewable energy itself, which is itself quite a substantial portion in the wind months. Then the merit order dispatch, I don't think there should be any challenges as far as the merit order dispatch is concerned. They are quite aware and they're doing a pretty good job of it. The SLDC has been able to integrate a fair amount of the power, but maybe they'll improve as time goes by. Yeah.
Thank you, sir. One more question was in terms of increasing the number of slabs, and there is also this contention that whether it would actually result in complexity, tariff complexity, and because Ministry of Power has actually been advocating for simplification of tariff across states. So do you have any thoughts on that?
Yeah. Basically, if you really look at it, Tamil Nadu has been subsidizing the domestic consumer, especially those who are consuming far higher amounts of power. As I mentioned, the people who have ACs and various kinds of gadgets in their homes really don't deserve to get that kind of subsidies. Now, obviously, like the other states, there are disincentives for consuming higher amounts of power. In fact, if the tariffs at the higher slabs are higher, there will be actually incentives and people will try to conserve power, which is also the need of the hour. And I don't think, because Tamil Nadu has got far too few slabs, and not only that, they're giving 100 units of power free to one and all. I mean, those at least must be stopped, and a couple of more slabs. Even though the Ministry of Power talks about reducing the number of slabs, Tamil Nadu still hasn't even scratched the surface. They still have scope for increasing that.
Thank you, sir. So the next question is, would TEDA share the power sales to TANGEDCO from the dispersed assets? And would that be used for debt servicing? This is from Mr. Mahesh. So Mr. Martin or Mr. Venkatachalam, I can repeat the question. So, yeah.
Sandhya, if you could repeat the question. Sorry, I was
yes,
reading the questions myself.
Sure. So would TEDA share the power sales to TANGEDCO from the dispersed assets? And would that be used for debt servicing?
Yeah. Yes. So all solar energy generated, we're talking about KUSUM-C, will be sold to TANGEDCO And of course, TEDA will use part of the revenue from sales of energy to repay the loan.
Thanks. And I think the next follow-up question is, so there are a couple of questions on why hasn't the tariff revisions happened since, 2012, and especially if, every other state has actually revised it. So I think this is a much more trickier question, but if anybody would like to take it with respect to tariff revisions.
Yeah, see, tariff revision is always a touchy topic. It's kind of political. I mean, one is okay, even if you revise the tariffs at this point in time, elections are coming next year, and it's always been a touchy topic. But for the highest slabs, I don't think it should be a big challenge for the government to raise these slabs, because it is the lower slabs that they must protect throughout, and the highest slabs, I don't think any state. I mean, I've been in Gujarat, and they have been the first ones to even charge for power to the farmers. I mean, they have really metered and charged power to the farmers. They have done it very effectively. Okay, these are all tricky questions, but then it is definitely possible, at least in a limited scale.
Thank you, sir. The next question is, how much reduction in average cost of supply will take place for TANGEDCO through Kusum C component? So is there an assessment on that?
I can answer this. We haven't done an analysis with the recent tariff that came out 2 weeks ago, which is now at 2.28. But with the previous analysis that we took, where we assumed a tariff of 3.08, the reduction in cost of supply, or actually the reduction in cost of supply over 25 years was beyond 100%. So substantial reductions.
Thank you, Martin. This question is for Harsha. So what component of the average cost of supply is the fixed cost burden from the legacy PPAs that includes the 3,000 new ones? So, I think Harsha, would you like to take that forward?
Thanks, Sandhya. I'm not actually sure of the component itself. As has been asked by Mahesh, we don't really have a lot of information about the details of the PPA themselves. So I don't really have an answer for him right now.
Thank you.
I noted it down.
We will check and get back to you on that, Mahesh. So the next one is, what is the status of introduction of competition in retail electricity supply business? And I mean, this could basically take away the PPA responsibility for the utility and only leave the wires business to take care of. So maybe Anne, you could jump in for this one.
Yeah, I was just typing the answer. See, there has been no developments on this front since the 2014 amendment to the Electricity Act was proposed. And I think one also needs to see how the implementation would really happen. Because as per the 2014 amendment, at least, it was the incumbent licensee who was supposed to hold a lot of the PPAs, and they were supposed to be allocated to the different supply licensees based on their load factors. So on what basis would the allocation really take place was a big question. And a lot is obviously one way that they have in order to cater to their consumers. And if they are left with mostly subsidized consumers, keeping the low cost allocation would be something that they would want to do. So I need to be done. And it would definitely be there going forward. Now, if I would be okay, there is a carriage and content separation. I mean, hypothetically, let's say there are supply licensees. So supply undertake procurement to cater. But
and we are losing you actually.
It is okay. Can I just type the reply if I say
yes, please? Yes, please. That would be helpful. Thank you so much, Anne. Yeah. So I'll just take. There are 3 more questions. Those are the last 3 questions we can take for the day. So first one is there any increased role of NBFCs, especially in Tamil Nadu? That's the first one. So would anybody like to take this? Martin, Mr. Venkatachalam?
I'm not too sure of that, but at least the NBFCs, whether they have an increased role, at least the banks have been avoiding most of the renewable energy and the power producers. So I have no idea whether the NBFCs would like to jump in at this point in time.
Thank you, Mr. Venkatachalam. The two more questions. So the one is there any plan by TEDA to check if there is overcapacity of irrigation pumps and then support? And I think this is already answered. So you just jump to the answered section. So I'll just go to the last one. So does government has a figure how many crores of money they are subsidizing for farmers by district? So is that something that is out in public domain? Maybe Martin, you can answer that.
To my knowledge, not by district. So,
okay.
So you have the annual total subsidy disbursement, but I haven't seen any data that would actually list it by district.
Okay. Thank you so much, Martin, and thank you so much, Mr. Venkatachalam and Harsha and Mr. Shankar Narayanan. I think we have answered all the questions. I will just give a quick summary. We are over by 4 minutes, so I'll just quickly summarize in terms of today's session. I'm sure you all had a good, exciting time in hearing about the various aspects of the financial situation of TANGEDCO, and we know that TANGEDCO in Tamil Nadu has a good story, in terms of renewable base, in terms of significant improvements that are there in quality of supply. There have also been improvements in terms of payment to generators, even though it's slow. But overall, we are all on the same page in terms of the fact that the financials are struggling. So there are several low-hanging fruit for the TANGEDCO to reduce its cost and at the same time to increase its revenues. Some of these steps have to be taken immediately, and some of these steps would obviously take some time. So be it in terms of merit order dispatch or power procurement planning, or how we can actually think of reducing the loss levels or controlling T&D losses, or even revising the domestic tariffs, optimizing cost of power purchase. Community solar was one of the aspects that also came out. And also how TANGEDCO can actually think of innovative ways of adding its capacity going forward. And finally, what role the storage and sales migration will play in this whole process, apart from the net metering, seasonal TOD, and other kinds of tariff designs. So while immediate steps are extremely important, we do see that state needs to plan for not just the medium term, but also long-term strategies, and also to basically see how things will change around for the utility and for the overall power sector. So on behalf of the organizers, the Madras Chamber of Commerce and Industry, Auroville Consulting, and WRI will be more than happy to work with the state on this. And we are really excited, and we also hope that you will stay in touch with us and also attend our future webinars in 2021. So thank you so much. I would like to thank everybody for joining today. And with that, I would like to close the session.
Thank you, Sandhya. And just one point, we have a power conference jointly with India Energy Forum, particularly touching upon the Electricity Act and the amendments. So I would like to invite everyone on 23rd of this month. I'll send you the communication in this regard. Thanks again.
Thank you so much, madam. It was a pleasure having you. Thank you.
Sure. Thanks. Thanks, everyone. Good day.
Good evening. Thank you.